You don't have to be right about thousands and thousands and thousands of companies. You only have to be right about a couple.
Warren Buffett is one of the richest people in the world. The American investor and chairman and CEO of Berkshire Hathaway has lived 9 decades, in which he has accumulated a massive fortune. Buffett is known for his practical approach, not only to investing, but also how he lives his life. He has famously been frugal about spending throughout his life, and for the most part appears to primarily be interested in making money simply because he enjoys investing and doing business. Regardless, the people all over the world are curious just how it is that Buffett managed to acquire his vast wealth. Today, we're breaking down how Warren Buffett has so much money. You don't want to miss this. First, let's talk about Warren Buffett's background. Warren Buffett was born on August 30th, 1930 in Omaha, Nebraska. He is 90 years old. He is the second of 3 children of former U.S. Congressman Howard Buffett and his wife Lila. Buffett showed interest in business and investing when he was quite young. He was apparently inspired as early as age 7 by a book called 1,000 Ways to Make $1,000. He spent his childhood trying various business ventures such as selling magazines and chewing gum. Buffett attended Woodrow Wilson High School. While still in high school, he made money by delivering newspapers, selling golf balls and stamps, and detailing cars. His senior yearbook picture reads, "Likes math, a future stockbroker." He actually wanted to skip college and go directly into business, but his father wouldn't let him. He attended Wharton School of University of Pennsylvania. He was actually rejected by Harvard Business School before being accepted by Columbia Business School for his master's degree. By the time he finished college, Buffett had saved $9,800, which is $105,000 when adjusted for inflation. Next, let's talk about Warren Buffett's early career. From 1951 to 1954, Buffett worked as an investment salesman at Buffett, Falk & Company. While he was working, he took a Dale Carnegie public speaking course. That inspired him to teach a night class at the University of Nebraska, Omaha, entitled Investment Principles. In 1954, Buffett got a job at Benjamin Graham's partnership for a salary of $12,000 a year, which is about $114,000 now. He learned a lot from Graham, who was very strict. His policy was to be certain that stocks provided a wide margin of safety after weighing the trade-off between their price and their intrinsic value. By 1956, Buffett had saved over $174,000, which is $1.64 million now. That same year, he started Buffett Partnership Limited. In 1957, Buffett operated 3 partnerships, which he expanded to 5 by 1958, 6 in 1959, and 7 in 1960. Around that time, he bought a house in Omaha, Nebraska for $31,500, which he still lives in to this day. That has to be one of the most unusual things about Buffett. Every single other person on the list of the world's richest people has a much more lavish residence. By 1961, 35% of Buffett's partnership assets were invested in the Sanborn Map Company. Sanborn stock sold for only $45 per share in 1958, but the company's investment portfolio was worth $65 per share in 1958. Buffett purchased 23% of the company's outstanding shares and obtained a seat on the company's board of directors. He then allied with other dissatisfied shareholders to control 44% of the shares. To avoid a proxy fight, the board of directors offered repurchase shares at fair value, paying with a portion of its investment portfolio. What happened was 77% of the outstanding shares were turned in. This led to Buffett obtaining a 50% return on investment in only 2 years. That goes to show that Buffett isn't just an investor, but also a clever business tactician. In 1962, Buffett became a millionaire. At the time, his partnership's holdings were $7,178,500, as of which $1.025 million belonged to Buffett. He then merged the partnerships into one and began buying shares of textile manufacturing firm called Berkshire Hathaway from the owner named C. Barry Stanton. He started purchasing shares at $7.60 per share, and then by 1965 continued purchasing shares at $14.86 per share, while the company had working capital of $19 per share. Then Buffett took control of Berkshire Hathaway at a board meeting, after which he fired Stanton and and made Ken Chase the president. In 1966, Buffett closed the partnership to new money. Then, he moved the company out of textiles and into insurance. For years, Buffett lived solely on his salary of $50,000 per year from the company and his outside investment income. In 1973, Berkshire acquired stock in the Washington Post Company. Then, in 1977, it indirectly purchased the Buffalo Evening News for $32.5 million. In 1979, Berkshire acquired stock in ABC. Then, in 1985, Capital Cities announced a $3.5 billion purchase of ABC, even though ABC was 4 times bigger than Capital Cities at the time. Buffett helped finance the deal in return for a 25% stake in the newly combined organization. In 1987, Berkshire purchased a 12% stake in Solomon Incorporated, making it the largest shareholder, and Buffett became the director of the company. Then, in 1988, Buffett began buying the Coca-Cola Company stock, ultimately purchasing up to 7% of the company for $1.02 billion. This has been one of Buffett's most lucrative investments to date. Next, let's talk about Warren Buffett's later career. In 1990, Buffett became a billionaire when Berkshire Hathaway began selling Class A shares at $7,175 a share. In 1998, he acquired General Ray as a subsidiary. Buffett set up $11 billion worth of forward contracts to deliver US dollars against other currencies. By April 2006, his total gain on the contracts was over $2 billion. In 2008, Warren Buffett became the richest person in the world for a time with a total net worth of $62 billion. He passed Bill Gates, who had been the world's richest person for 13 years at the time. Then, in 2009, Gates once again passed Buffett. Also, in 2008, Buffett bought General Electric preferred stock with an option to buy 3 billion shares at $22.25 over the 5 years, and he also received a 10% dividend. In 2009, Buffett sold some Procter & Gamble Co. and Johnson & Johnson shares for his personal portfolio. That same year, Buffett invested $2.6 billion in Swiss Re. Berkshire Hathaway also owned a 3% stake with rights to own more than 20% of the company. Also in 2009, Buffett acquired Burlington Northern Santa Fe Corp. for $34 billion in cash and stock. In November 2011, Buffett bought 64 million shares of IBM stock worth around $11 billion. This raised his stake in the company to around 5.5%. This was unusual because Buffett had said many times that he would not invest in technology because he didn't understand it. On August 14, 2014, Berkshire Hathaway shares hit $200,000 a share for the first time ever, capitalizing the company at $328 billion. Buffett had given away much of his stock to charities by this time, but he still had 321,000 shares worth $64.2 billion. After the difficulties of the global economic crisis a few years prior, Buffett managed to bring its company back to its pre-recession status. This shows how he has been able to patiently ride out market fluctuations over the years. Next, let's talk about Warren Buffett's investing style. First, pick the right business model to invest. Warren Buffett is known for being what is called a value investor, which means he uses the strategy of buying stock in a good company when it's low and patiently waiting for the company to grow, thereby increasing the value of the stock and making its investors money. Just one issue: that is not really how Warren Buffett got rich. Warren Buffett actually made his first million by running a hedge fund. Simply put, a hedge fund makes its money by taking investors' money for some time, as well as a percentage of the profits. Buffett then switched to owning small banks, which take people's money for some time, as well as all of the profits they earn through lending. Eventually, Buffett switched to running an insurance company, which is based on the model of taking people's money forever, as well as keeping 100% of the profits, because people don't get it back unless something bad happens to them, which rarely happens. Therefore, it is one of the best business models and is the key to Buffett's success. Second, get a deal. Warren Buffett has almost never bought a significant amount of stock without some sort of deal. He doesn't buy a few stocks at a time like retail investors, because that way is quite hard to make a lot of money. Buffett typically buys preferred shares at a discount instead of common ones at a market price, so he gets special treatment. This prevents him from paying the same high price for stocks everyone else does and taking on the same risk, since if the company he invested in goes out of business, he will be first in line for the proceeds. Without going too much into it, this is how he has been able to make a lot with low risk. The key to doing this is building relationships with company leaders, which Buffett has proven very good at. He typically reaches out to them and tries to secure shares at a lower price to ensure he makes the most profit in the end. Finally, let's talk about the unique things about Warren Buffett. Buffett is quite frugal. In 2006, his annual salary was about $100,000, and in 2008, his total compensation was $175,000, which is incredibly low. He has been able to bring in a massive amount of money in investment holdings while barely spending a dime on himself in comparison. It is not hard to understand how he got so rich when you consider the simple math of his lifestyle choices. He earns a lot and spends a little. Beyond being frugal, Buffett traditionally avoided technology. In 2006, he didn't even have a mobile phone or a computer and drove his own car, a Cadillac DTS. By 2013, he was seen using an old Nokia flip phone and said he had only sent one email his whole life. He finally relented and got an iPhone in February 2020. He also is known to read 5 newspapers a day to stay informed the old-fashioned way. It may seem somewhat foolish to avoid technology, but it can also be argued that if someone's way of operating has made them as successful as Buffett, perhaps there is no reason to change it. That wraps up our video about how Warren Buffett has so much money. Once again, don't forget to like, subscribe, and comment. We'll see you next time.